Welcome back, Alpha Hunters. I am back this week. Well, for the weekly wrap up at least. I was gone throughout the week. Got back late Friday night. Spent some time Saturday morning going over kind of what went on this week of trading. Didn't really see anything. No cell phone reception, but we did see some very interesting things on the market. I'm not going to go through everything. I'm going to make this actually pretty quick, but some of this is going to be probably really good for me as well. That's why you recap the week, right? We start off the week kind of bullish, looking pretty good. Tuesday, we saw tech get hit pretty hard pretty much throughout the day, dropping off pretty good there. Wednesday, nice little bounce back day as the market was, it seemed like probably mostly anticipating TSMC earnings. And that's what we got. The gap up on the market there on Thursday. So there we go, gap up, but you can see nice sell off there to start the day. Nice little bounce, even rollover. Closed at the base of the lows of the day. Friday, nice little gap up, trade a little bit higher, a little bit of a pullback. So that's how the week kind of went. As for some of the economic data that we got this week, initial jobs claims on Thursday morning came in at 241K. Forecast was calling for 260K. Prior was actually 260K. So here you go. Take a look at sector performance throughout the week. You can see energy has got hammered. Really start on the day there Tuesday. It really kind of just never bounced off of that gap down there on Tuesday. Healthcare steadily kind of underperformed throughout the week. Kind of got hit more in the middle of the week and just never really recovered. Tech, as we know, got hit pretty good there on Tuesday. Had a little bit of a bounce back. Kind of getting into Thursday a little bit and just kind of came off kind of the highs there on Thursday. But the high of the week there for tech was on Monday. A little bit more on that to come later. Industrials a little bit underperformance. Staples a little bit kind of like market performance there. Communications a little bit outperformance there. Discretionaries, materials outperformed pretty good. Financials did very nicely. Real estate did pretty good, which is kind of interesting. We'll take a look at yields here in a second. Real estate performance, I would have thought yields would have dropped off a lot more than probably what they did. Utilities did pretty well on the week again. All right, this week we saw the VIX kind of continue to kind of slide through kind of some of these support levels of the moving averages that are coming up. The interesting thing is really going to be looking at kind of how tech kind of performed, the Qs performed on the week, and the SPY. So the SPY continued a little bit higher the other week. Qs not as much. This next week, obviously, is going to be very dependent on how tech earnings go, but TSMC did start off tech earnings pretty good. DXY, the dollar index, continued up, and then drop. Just a nice continuation every day this week until we got to Friday. Tuesday, a little bit of a hangout day, continued higher. Wednesday, Thursday. We almost made it up to some of these lows that we're putting in back in kind of like late spring, early summer. And it's maybe we got to this low. So I think right now, I think you're probably just 200 moving average. I think you're probably definitely just waiting. I think last week we kind of talked about probably just waiting as it came into that 100 moving average. After how much it's been extended or the beginning part of October, I think I would just rather wait, see it clear through all these other moving averages, and then probably just look for a retest. Right? I think that was kind of the mindset of last week, and I think that would probably just continue to stick by that. I think right now, just wait and see, kind of see how it sets up going forward. GLD Gold Trust woke up Monday and basically just rocketed higher every day this week. Looking very strong, nice solid breakout. That's why I stay sane, be bullish on any kind of dips and consolidations. There you go. Looking pretty good. As for the 10-year yield, so we saw real estate perform very nicely this week, and we didn't really see yields drop off. If we take a quick look at the longer term yields, this probably has more determinant of how real estate does is the 30-year yield. And you can see it didn't really do much. I mean, we had an early week kind of drop off there for maybe some of the longer terms. All we did was kind of just pulled into this 4% level there on Wednesday, and also the 10 EMA pushing up, and we just bounced right off of it. So if you're looking to play bonds in any kind of way, obviously we just got yields that just bounced off of a level. So if we roll back over, get below this 4% level, I would be probably more bullish on bonds. As probably yields would be like, okay, we just bounced, we retested off this area. Yields probably roll over, take out this level. If they keep dropping, they probably would keep dropping in my estimation, and I would just be bullish on bonds at that point in time. 10 and 2 inversion. Got to really kind of like how it didn't really do too much this week. We just kind of pulled back, kind of consolidated a little bit more of a basing action after this breakout that we had in September. Nice little pullback so far in October. Like this basing action, probably continues higher, but it looks very good. HYG continuing higher this week. Nice. LQD and the TLT, I believe, also look roughly the same. Yeah, they had nice bounces to start the week. Quick retest and got right in that 10 EMA. A lot of gaps here on bonds. So, yeah, a lot of pre-market movement, overnight movement there in yields and stuff like that. So, kind of a tough play, obviously, with the gaps basically every day there. But we got a quick retest Wednesday higher, and then we kind of rolled over. As we have made our way lower here throughout October, I just kind of want to be a little bit more not really picking a side, just kind of waiting to see if we get a retest. There's a retest. So if we do wind up bouncing now, this will be a change of direction, right? So I think you were looking to probably take this retest bearish if you did snag it, or if you did not, but you are definitely looking maybe to play it bullish. You could definitely try to play it bullish now. I mean, you have a pretty good stop loss below even the start of the week's low on Monday. But if we get back above Wednesday's high, you're probably definitely looking to go bullish on bonds. If you're looking to go bearish, I mean, you could definitely say, if we get back below this past week's low, yeah, maybe you take it lower. But right now, I think I still want to see just a little bit more of a setup. All right, I'm not going to go through earnings, but TSM did have earnings Thursday. It traded Thursday, but they did very nicely. Very good. One of the things that they kind of did say is they have a lot of demand, especially, obviously, they're the ones that making a lot of the processors for AI chips. That's about the main thing I want to just hit. They are still seeing a lot of demand there. So what that means is all these companies that are building out these AI tools are still buying up a lot of, obviously, the semiconductors, all these chips that are processing and building out the AI stuff. So what that says to me is if we start to see any increases in variable expenses, especially related to power consumption for the software companies, Microsoft, Alphabet, Amazon, a lot of those that are building out Meta, another good one. If we see that tick higher, and they even mention it, even cough mention it, even subtle mention it with a wink, the market will absolutely destroy those companies. So be very careful, and we will find out if that starts to happen this week. As we have seen many of these companies make deals to, bring on nuclear power reactors and stuff like that over the past quarter or two. The RSP continued to grind a little bit higher throughout the week, getting a little bit redline-ish for me, a little bit too hot. So yeah, I think I'd be taking the profits, baby. DIA, kind of feeling the same thing. Nice little gap up there on Thursday. Yeah, didn't really do too much thereafter. DIA might be the one that might be okay going forward. I'm not going to say it's going to scream higher. Not going to even say it's going to go higher, but I don't see it getting wrecked nearly as much either. The IWM started off very strongly this week, but didn't really continue there to end out the week. I think for now, I'd rather just be hands off on the IWM. I got really nothing here. We just took out the high there from September. So, we're kind of breaching, into the upper highs of the summer. I think I would just rather wait for now. The Qs. Okay, this is the one I wanted to get to. We have what we talked about last week was lower highs come in throughout the week. That is very important because what did we get on the SPY? On the SPY, we got higher highs. So that was what I kind of mentioned and kind of talked about last week is if we start to see that the week before tech earnings, a lot of tech earnings. I get it. TSMC also did report this week. But if we start to see that, you got to be biting your fingernails a little bit harder right now because that is not good. That's also an intra-week switch because that could be a shorter term on this bullish move that we've seen really since the beginning of September or even going back to the beginning of August. That could be kind of just that switch that we start to see a little bit of a pullback here, at least on the near term. But we have a larger switch that has formed out across months and even across Q3, Q4 tradings. So that is what has me a little bit worried right now. I'm not saying go bet the farm on puts, okay? I'm not saying that right now. I'm just saying the market has given you plenty of signs over the past 3-4 months that we are seeing huge changes, and we are now seeing some of those changes even play out over the past week. That has got to be very worrisome for, I would say, a lot of people that obviously own stock assets. So we'll see how this week goes. I don't know how it'll go. It's going to depend a lot on kind of some of those companies talk about earnings and stuff like that. But telling you, man, watch that variable expense. If they talk about, oh yeah, we're seeing really high, much higher energy costs and stuff like that, or we're having to spend a lot more money to keep energy costs down, or anything like that, watch out. Glad to be back. I'll be back on the live stream throughout the week. Alrighty, Outfunders. Take care.